Thank you, everyone. Evan, do you want to quickly introduce yourself?
I'm the other co-founder of the business of Sesfakile and work very closely with Kundani's son.
Thank you. Evan, Kunda and Krabo for your presentation. And Evan, welcome. Kunda, you touched on it right at the end. And I suppose no fixed income and property panel can even be complete or not be started with what you mentioned about the interest rate cutting cycle. So my first question to, I suppose, Evan, will start as you. How are you positioning your portfolios to benefit from this rate cutting cycle?
That's a great question because there's, as Kunda mentioned, two very different buckets. So globally, the lower interest rate cycle is really an indication of a weaker economy. Therefore, we want to try to avoid the cyclical movements of the general property sector and focus on what Kunda spoke about, the demographics and the consumer demand. So we position more towards the likes of data centers, more towards healthcare, senior living, skilled nursing facilities, manufactured housings, things that are not susceptible to the cycles as such. Whereas in the South African context, it's a very different story because we obviously follow in the US, but our fundamentals are, post the GNU are actually looking slightly better. So what we're seeing is a lot of generalist investors and offshore guys coming into our markets, and what they play is liquidity. So within the South African context, we're actually going overweight the likes of a Growth Point and a Nepi because that's where the liquidity lies. So it's a little bit of a tale of two cities, but that's how we're positioning ourselves for a low interest rate environment.
Okay. I'm going to come back to that question, Kunda, when we chat about what you mentioned now, GNU and this optimism on SA. We'll come back to that. Karabo, yourself, in terms of how you position your portfolios?
I think for us, the position in anticipation of the event, we don't wait for the event to happen. So we already, when we're quite confident mid last year that the peak of the SAFA rate heights had essentially arrived, we started going long duration, and we have already been handsomely rewarded for that. You look at the performance over the last quarter, and but the point is when we're not looking to be balanced and reposition a quote at all time. What we're looking for is good entry quotes. And mid last year was a very good entry point for duration trades. Yeah. Whereas the rate catching cycle would believe that it's going to be shallow, and that's what the market believes. So there's still value in having some cash. There's still value in having credit. You just have to be discerning because now you're going to use another 75 basis points. Let's say that according to falls. So you're going to have to make up if you want your performance to stay consistent.
Yeah. And in fact, just Karabo raised a good point now about the performance over the last quarter and how they benefited on. When you look at the Curate website, you'll find that the new fund currency will have very new fund fact sheets with very little performance track record, given that we've just launched the business. The fixed income funds were converted and rebranded to Curate, and those ones you'll find with a much longer term track record, and you'll see why we selected the Momentum Fixed Income Student Management to take a look at that. Kundai, a question to you, and also carrying on from what Evan said. People always say last year's winners, stay away from them because it could be this year's user. And given property had a tough, 4 or 5 years, and then last year, for those who got caught unawares, it then had a fantastic year and it continues to do so now. Is it too late for people to get into property?
Way too late. Really? No, it's not. So, just kidding about that. I think if you look at, we've had this question from a lot of our clients who've enjoyed this 30% rally and maybe in this year and about 50 over the last 12 months, right? And, the answer we have for them is the following is I think listed property had, gone through a really tough 4-year period. The sector was extremely cheap to, around kind of October last year. Sentiment was bad. Interest rates were high. Political sentiment about South Africa was pretty bad as well. And as a result of that, when interest rates started peaking, particularly in the US, and we had the advent of the GNU, it was a re-rating driven rally. So it's really driven by what's happened to properties rating relative to bonds, but also our outlook around the earnings story. So the sector has re-rated, and that's what really drove this rally that we saw. Now, if we say fast forward, are we too late? Where are we looking now going forward? The point is that we had a re-rating driven rally, but now we think we're in a good position for the sector to outperform, driven by earnings growth. So what we haven't had for the last couple of years is decent inflation beating earnings growth. And we think 25, 26, and 27, though that will reverse. Our earnings should beat inflation over the next 2 to 3 years. And we think you'll start to get decent 13 to 15% total returns from that sector. So we don't think it's too late. We actually think it's a good time to still get a good return out of property.
Can I just add, is with regards to the portfolio that we're offering to the market here, the flexible property funds. Kundas spoke about SA property, and I believe there is value in SA property, but the big portion of it, not only in the offshore buckets, but even on the JSC, the All-P property funds on a see-through basis, around about 40-50% is offshore. And if you look, that 50% rally since we call the first false start when they thought that the rates were going to be cut in November last year, we've done 50%. But if on a see-through basis, the likes of Sirius has grown earnings probably about 7-8%, but their valuation is only up, or their price is only up circa 5-6%. So the offshore component of it has not rallied by any stretch of the imagination. It's really the SA markets, but as you said earlier, it's because it came from such a low base. And now not only is it coming from a low base, but the fundamentals have turned positive.
Yeah. And it's actually also why we selected Sesfikile and gave them the mandate to manage both local and global. Because I think if you saw what happened during that tough time in the property sector, if you were only exposed to SA property alone, there was nowhere else to go. Whereas with a global mandate, I think there's a lot more, the universe is a lot wider for you guys to look for opportunity. From all of your answers, I'm hearing a lot of macroeconomic talk. So I actually wanted to ask, Karabo, I'll start with you. How important is macroeconomic forecasting in your process?
It's very important. I didn't speak much here. I was out of time at our slide, but part of that expanded resource that we have access in the group, in the Momentum group, is our research team, is our macro research team. So over and above developing scenarios and how the yield curve's going to look and over in those scenarios, let's say, even at a single corporate investment level, we would look at cost performance. How correlated is the revenue, EBITDA, costs line of this company to macros, and how is that going to affect performance going forward? So it's part and parcel of every investment. It's not just our duration phase. It counts.
And yourselves?
Yeah. At Sesfikile, we pride ourselves on honesty. And honestly, we can't call the macros. That's not our job. Our job is saying what are the property prices implying? And is it too cheap or too expensive from what is implied in that macroeconomic outlook? To call currency, to call rates, unfortunately, we're not experts at that. And unfortunately, I truly believe that no one really is.
Okay. Differing answer. Karabo, last question for you. I want to talk about credit for a second. Within your credit portfolio, and you also touched on it briefly, but I want you to go into a bit more details. So what factors do you focus on to mitigate the risk of losses in that Income Plus fund?
So for us, strength of cash flow generation is key. Revenues do not pay the bills. It's cash flows that a company makes at the end of the day, operating cash flows that matter. And another one is governance. If you look at the South African markets, the defaults that we've seen is either governance failing or it's a liquidity crunch. So hence why those two are key. However, you also have to consider capital structure and also EEB structure. Some of these investments that come to the market, you're investing at a holdings level. A holdings company is dependent on dividend flow. Unless you have guarantees from the operating companies that make the cash, then that's not a good investment.
Yeah.
You have to get close to where the cash flows are.
Thank you. And I suppose from a property perspective, it's not so much a credit issue as it is, how do you find the quality in terms of your property investments? I suppose my question to you is, what metrics do you use to evaluate the quality of the properties that you invest in? And then also, does that metrics differ between how you look at global and local properties?
Yeah, thank you. We've got a one team approach. So when we're talking, property, we're talking generally local and global. And in terms of how we evaluate the companies is the same in terms of that quality, whether we're looking at a REIT in Singapore, a REIT in Soweto. And the issue is when we really look at the quality of a company is really based on the quality of the underlying real estate, the quality of the assets, the quality of the management. Karabo mentioned the issues around corporate governance. That's super important for us. The tradability, liquidity of that stock, and lastly, very importantly, the balance sheet. So the balance sheet is not just a static debt to EBITDA ratio or loan to value ratio, but it's also the diversity and the sources of that funding and how hedged that book is. So we analyze that stuff. That's that second D when we talk about, detail in the 4 Ds. And that's what we look at. But I think quite clearly, our process is not about investing in the shiniest buildings or the best located assets. It's what price are you getting a good quality asset that can be competitive in this micro market. And that's what we define as quality.
Perfect. Thank you very much. And thank you to Momentum Fixed Income and Cess Fikile Capital, both specialists in what they do. Momentum, very focused on Momentum Fixed Income team, only focused on fixed income. And as Kundai said in his presentation, Cess Fikile only is focused on property, which is one of the reasons why we selected them. The sheer focus on it is that they do and how they become specialists in that space. So thank you, Karabo. Thank you, Evan. Thank you, Kundai. And hopefully next year we'll have your son on stage. Thank you.
Thank you.